Most retail investors are chasing ghosts. For the last year, everyone and their mother has been screaming about the big three: Nvidia, AMD, and Taiwan Semiconductor. But here's the cold hard truth. By the time a stock is the lead story on every news cycle, the easy money has already been made. If you're just buying what's trending on Reddit or CNBC, you're not an investor. You're a bag holder in training. While the world was fighting over Nvidia at all-time highs, I was looking at the side door. I found a group of stocks that were making record-breaking cash from the AI boom, but without the hype tax. Today, I'm showing you the 6 stocks that actually made me the most money last year, including one blue chip that Wall Street had left completely for dead. To understand my portfolio, you have to understand AI Capex. Big tech companies are spending billions of dollars, but where does that money actually go? It doesn't just vanish all into the GPUs. It goes into massive data centers, which requires high voltage electrical systems, cooling systems, and heavy construction. This is where I found my winners. I ignored the overbought territory of Nvidia, Palantir, AMD, and looked for companies growing double digits while significantly growing their backlogs. I'm talking about names like Sterling Infrastructure, IES Holdings, Emcor, Argan, and Comfort Systems. While the news was focused on AI agents, these companies were busy building the physical world that AI lives in. These aren't tech companies in the traditional sense, but they are the backbone of the e-infrastructure. These companies handle the complex mechanical and cooling systems. As chips get hotter, their profit margins get fatter. While the AI darling stocks were priced for perfection, meaning any tiny miss would tank the stock, these value plays were trading at a bargain. They were consistently delivering record quarters. Why? Because you can't run an AI revolution without power and infrastructure. Retail investors love the shiny new toy, but I looked for where the capex cash was flowing. These stocks were making huge cash every single quarter. They were efficient, they were growing, and most importantly, they were cheap. Then there's the blue chip, Google. There was a moment last year when Wall Street wouldn't touch Alphabet with a 10-foot pole. The narrative was the ChatGPT was going to kill search and that Google had lost its way. The stock was beaten down to a valuation that didn't make any sense for a company that literally owns the gateway to the internet. I decided to go heavy. Why? Because while people were worried about their chatbot, Google was quietly integrating AI into its entire ad stack and scaling its cloud business to new heights. Google was a gift from the market's irrational fear, and it paid off massively. The lesson here is simple: stop chasing the noise. If you want to outperform the market, you have to look where the market isn't looking. While everyone else was looking at the output of AI, I was looking at the inputs: the infrastructure, the cooling, the power, and the mispriced giants. That's how you build a portfolio that doesn't just follow the trend, it leads it. Don't forget to like and subscribe the video.